Well, hello all. It is I, Crypto Diaries and Virtual Nexus, here to talk to you today about institutional DeFi and tokenized real-world assets. As always, cryptocurrencies and blockchain investments are extremely speculative and risky. They fall outside the much of currently regulatory frameworks and as such are risky for novice, inexperienced, and experienced investors. Because of its novel nature, the cryptocurrency market is fraught with many difficult to evaluate assets, including fraud, scams, and schemes. Do not risk anything you cannot stand to lose. Okay, this presentation, all associated with Crypto Diaries and Virtual Nexus are for educational purposes only. We never recommend the purchase, sale, nor trading of any specific asset or issue. However, we do offer information to enable our audience to learn how to manage their own risk and potentially capitalize on mispricing in the cryptocurrency and blockchain markets or market. Okay, so what are we here to talk about today? We are here to talk about blockchain fundamentals, tokenized real property. So you'll notice recently, okay, that the US dollar has been having issues, and this is because it's based on paper. A lot of people don't know this. I remember in the late 70s, I think it was about 78, I asked my dad, I said, hey man, what is money? Does money grow on trees? Why is it made out of paper? Where does the value come from? Because we still had silver coins back then, pre-1965, dimes, nickels, quarters, whatever, they were silver. So originally money was made out of precious metals and exchangeable for precious metals. In 1971, I think that's the exact time, we moved off the gold standard and we moved into the petrodollar directly thereafter. And you can remember the oil, those who were alive then, I actually barely remember the oil shocks. And the bank, that's when we moved from Main Street to Wall Street in the United States, and the entire world has become financialized, which is a lot of the risk we're finding now. We're going to talk about institutional decentralized finance, tokenization of real assets, and we're actually going to talk about something, Islamic finance, which actually combats this, which is very interesting because the cultural shifts that are going on in society right now. Now, stable coins are thought of as asset-backed, but they're backed by fiat currency, which means it is backed by a currency that is not asset-backed. A tokenized piece of property is basically has a legal contract which is validated on the blockchain and then turned into a token. Let's go institutional DeFi. So there's an article by the Oliver Wyman Foreman, and it talks about JP Morgan's pilot to address the legal uncertainties of DeFi, to establish shared standards and envision the target market infrastructure. Let me give you an example here. So Real IT tokenizes assets on Ethereum, okay? It's in the public record, okay? And it's stored on the blockchain. So you've got a legal firm, you have property management service, and the rent is now streams of payments are now spread into the Real IT tokens. Let me just give you an example of this. Fractional reserve real estate, okay? You can create an account. I actually have an account here. I'm all validated and everything else. And so what it does, let's see what kind of beautiful pictures we have here. Yeah, so they basically put the assets on the blockchain and they stream the payments to a token. It's pretty much it. It's an Ethereum token. Let's see what else we got. Okay, that's that. All right, so let's talk a little bit more about tokenized real-world assets. So IT, you have streams of payments. So a REIT, or real estate investment trust, is actually the streams of payment from real property are assigned to essentially the token holders, which are in the form of stock certificates. They used to have bearer stocks and bearer bonds. If you ever seen Die Hard, if you haven't, you need to watch it now. But those are bearer bonds, which means if you possess the bonds, you can redeem them. So tokens are similar to this. Now, okay, we're going to talk about tokenized precious metals now. So we have tokenized gold, Paxos Gold, Tether Gold, Cash Gold, Perth Mint Gold. And each of these are audited with varying levels of accuracy. Most of them were within less than 1%. Let's see, it was 0.001. So 0.1% within accuracy. So people complain about this. Many of these you can validate on chain. So I'm going to give you an example of this by moving my browser over to the record area here. Let's see what I can do. And I'm going to show you, so here's some Cash Gold on chain. You can actually validate the actual certificates. Look at this. This is the actual gold as it's scanned in and out of the vault. Now, Paxos Gold is validated by the State Bank of New York, and you actually can buy the PaxG token. So you can go to PaxG. Let's see, there's Coinbase. I'm not going to hit that. I'm going to do PaxG space. We'll do CoinGecko. Okay. And then we'll just pull that up real quick. And that is the actual gold price. Right now, it's about 1988. It was 1988 an ounce. Let me see how it is right now. And yes, I'm looking over to the monitor. I will suggest and mirror these at some point, but I'm not going to deal with it. This is the first time I got back home and I have multiple monitors again. I used to have this pretty well set up before, but I've been on the road for a long time. So right now, its current price is 1985. It's got a slight premium, I think of approximately $1. We'll do JM bullion gold. Where's my B? Bullion gold. And that is right now, it is at 1977. So it's gone down a little. This has gone down less than $3. So it seems a little more price elastic. And so there's a small premium. So we said 1977. So you'll go 1977 divided by 1984. So it is approximately 0.0036. So it's 0.36% premium. That is tiny. So you're talking about 0.36 times, that'd be times 0.36. No, it's 0036. It's actually a little bit less. So about $7 of premium. That's pretty low. So why am I talking about all this right now? Let's go back to our slides. So right now, let's do a US dollar inflation. What happened in 1919? I think it's 71. There's a famous website called What Happened in 1970. What the F happened? What the fudge happened? Here it is. Okay, that's when we went off the gold standard. And if you look at these charts, these are inflation charts. This is just through 2012. Okay, I'm going fast. But let's do the value. Let's do, you can see the value of the dollar just dropping. Okay, value of the dollar chart. Okay, charts. And we're going to do a quick image here, and then we'll go with, there we go. 2023. Let's get a fresh updated one. And okay, so this is an important one. The US dollar grew. 20% of all dollars ever traded were in 2020. All right, that's what you need to know. So that's why we're going through this and why Mr. Karate and Virtual Nexus is helping you out. What are we doing? We're educating you on asset-backed tokens. Asset-backed, so real property. When I talk about real property, I'm usually talking about real estate, gold, precious metals, things like that, actual property. Real estate has issues right now due to all the shenanigans around interest rates, which we're going to talk about when we get to Islamic finance. And you're going to see a pattern in our culture, which we'll get to in a moment. So we talked about Paxos Gold, Tether Gold, Cash Gold. Let me show you. I wrote an article on this a couple of years ago. So we have London Bullion Market Association, or London Good Delivery Bars. These are certified gold by a proper refinery. There is some discrepancies, meaning that they slightly, this is I'm going to get you, sucker. It's a classic move where people, they over golded. You got to watch it. Keenan Ivory Wayans. It's funny. Okay, so what is my point here? Is that bottom line up front, Tether Gold is neither audited nor backed perfectly. Paxos Gold, though audited, shows some similar discrepancies to Tethers. It's a slightly less golden token. It was less than 0.1%. And there's actually, you can on-chain look at these. So let's look at this. You can actually, so where's the on-chain report? You got a gold lookup tool, so you can actually look up the actual gold in these things. Yeah, so I'm getting some, I don't know if I'm on my VPN or something, oftentimes. Yeah, so you can actually go and you can look up specific, you can look up the specific address of the tokens. You can actually pull up the contract. All right, I'm not going to get into this, but there is 611 gold bars at 7643 kilograms. We'll do 7643 times, let's see, it's roughly 454 grams per kilogram. It's 454.454. It's repeating, and that gives us 3.5 million grams. That's a lot of gold. Okay, so Paxos Gold is less, but we're not going to get into all that, and we're not going to look at it. I've already shown you the basic ideas. All right, we're good. So Paxos Gold has no fee for custody, minimum purchase, time to settle is instant, it's allocated, instantly redeemable for physical. I have not tried to go redeem some. Why am I telling you this? Because the US dollar is in peril right now. The banking system has billions in underwater treasuries because they bought them long term to hold, and then the Fed started raising interest rates precipitously. They also seized a bank in New York, maybe even been unconstitutional, seizing a liquid bank, and they're trying to close all off ramps to the dollar system. That's what they did to Russia. That's what they're going to do to basically, all of us, because the way that the fiat system works is you have to have faith in it. And if you have a way to get your money out of it, it will rapidly deflate. So they're yelling at you how confident they are in the system, usually when they're not confident. So that's that. All right, let's continue. Tethered gold also has regulated. This is not regulated by the State Bank of New York. That slide is actually incorrect. That's the issue. It's not. It's got Singapore regulation. I don't know how valid it is. Cash gold has Singapore regulation. You can actually use the Cash Gold Explorer, which I already showed. Now we're going to talk about Islamic finance, which talks about Maisir, gambling, and I may be mispronouncing this. Please forgive me. Let's say how we pronounce this. We'll do. Okay, let's go over to here. This is actually Islamic finance guide from a white paper, which I actually referenced in my slide deck. Okay. Pronounce Arabic site. Let's see here. So we'll go pronounce Arabic. We'll do, okay, Maisir. See what we got. Okay, it's already Arabic. So Maisir pronunciation. How to pronounce.com. Let's try this. I've never tried this. Hopefully it won't take me too long. Maisir. Wow, she's so white. I don't mean that in a disrespectful way. It's just a statement of fact. Maisir. Let me try it again. Maisir. So Maisir is essentially gambling, and then riba and qarar. But let me see that last one. Let's try. It'd be qarar, probably. I'm so terrible. I'm so white myself. All right, let's try this one. Gerer. Yeah, I don't like this website. This is terrible. Gerer. God. Excuse my language. Oof. Anyway, let's not get into this. I will wait. Let's try. See, I could find this in Sanskrit because I've been studying Sanskrit. Mazer. There you go. Mazer. That sounds actually right. Mazer. Wow, this is English Chinese, wrong one. All right, well, let's forget it. I'm just taking too much time. I apologize. So, gambling, interest, and uncertainty. Okay, Islamic finance, for example, there's no riba, there's no late fees, and there's risk sharing. We're going to go through this. I use this guidance residential home loans, Islamic finance link. Okay, now we talk about gambling. So the first one is Mazer. And gambling is a wagering of valuable items such as money on an event which is undeterminate or uncertain outcome. That is haram, meaning it's forbidden, verboten, for those of you who are not into haram. It is not halal. Okay, riba, which is interest, so that's a gain in a transaction without a loss in the case of a failed business. For example, there's excess or surplus over and above the loan capital. Let me give you an example. If you buy our house, you give them a $100,000 down payment. Okay, if you don't make your payments, not only do they seize the interest you paid, they seize the interest you paid, the money that you had, and the house. Okay, not to mention compounding means you can owe more than you borrowed in the first place. Okay, the determinant of the surplus over time. The bargain is conditional upon the payment of the predetermined surplus. So you can actually so it's conditioned on you paying the surplus over the amount you borrowed. Okay, so it's considered evil and it is haram. So if you think about this, and usury was historically prohibited in Judaism, Islam, and Christianity. A lot of people don't realize this, okay? And so you end up paying more than you owe, and then if you don't make the payments on time, not only is there penalties and things like that, they increase the cost. There's no late fees in basically Islamic finance. Why I mention this is they're creating Islamic tokens. That's right, which are truly asset-backed. Now, don't get me wrong, yeah, the rest of the world is a bit shady and sketchy. just like the U.S. and the Western world is turning into. But also note this. The last time things got out of hand, Islam preserved a lot of the important parts of culture, including astronomy, right? Physics, mathematics. Now, Islam didn't invent these, regardless of what people will tell you. They invented some of them. I don't want to be disrespectful. A lot of it was when they invaded India, such as the zero, Arabic numbers, or actually Sanskrit numbers and things like that. I'll probably get vilified, but whatever. All I'm here to say is that there's some things to learn from Islam. And right now, with the gender bending and things like that, expect a huge backlash and severe religious penalties. This has happened before. It will happen again. Be prepared. I'm not taking a side one side or another. I have my own position. This is not the place for that. But I'm just warning you. My job is to warn you what I see, right? I scan the horizon. I'm telling you what's inbound. People are losing their minds over basically sterilization of children and things like that. This would never happen in Islam, okay? And so in that same way, at 500 AD, 550, Islam preserved so much that was good. And so you can expect the rise of Islamic civilization, okay? Regardless of what anybody believes, I'm just telling you this is what's happening, Dubai and things like that. Now, it's not just Islam. The whole of the world, we had 2,000 years of Western Christian dominance. That civilization has pretty much collapsed. Okay, it's collapsing. I mean, you're just seeing the inertia right now. So that's what I'm talking about. Why am I telling you this? Because you can get asset-backed tokens and to watch for the legal, regulatory, and cultural issues that we're doing this within. Again, this is not whether I want or dislike or don't want. I'm just telling you what I see. This has happened before. It will happen again. Okay, so we talked about Qadar, or me mispronouncing it, and so it's gambling. The main things is you're selling of unknown goods, such as like a grab bag. You're buying a commodity for an unknown price, what's in your pocket, or you're gambling, you're uncertain. The basic idea is uncertainty is likely to lead to a dispute between contracting parties. So to summarize, interest has posed risks since the dawn of civilization. It's prohibited in Christianity, Islam, and Judaism as usury. The entire global banking system is based upon this risk. Tokenized real-world assets enable asset-backed tokens, access to real property and portability. This may be the real digital gold. Listen, I love you all. God bless you, and I hope to see you soon.